Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Sedan. This week we're covering the provisions of the Federal Disaster Tax Relief Act of 2023. Spidell is offering a free on-demand webinar titled Tax Relief for Disaster Victims, which will address federal income tax relief generally. You can register for this session at spidell.com by clicking on the webinars dropdown and selecting On-Demand Webinars. The Federal Disaster Tax Relief Act of 2023, signed by President Biden on December 12, 2024, provides retroactive and ongoing relief to victims of natural disasters. The FDTRA provides a gross income exclusion for qualified wildfire relief payments. The relief applies to any qualified wildfire relief payment received by an individual during the 2020 through 2025 taxable years that is related to a federal disaster declared after 2014 as a result of any forest or range fire. President Biden issued a major disaster declaration for the Los Angeles wildfires on January 8, 2025. However, as the law is currently written, the exclusion only applies if the qualified wildfire relief payment related to these wildfires is received in 2025. For tax years for which the statute of limitations has expired, taxpayers can file a refund claim up to December 12, 2025, because claims can be filed up to 1 year after December 12, 2024, which is the date of the FDTRA's enactment. As of the date of this podcast, the IRS has yet to issue any guidance as to how taxpayers should file a refund claim for a closed tax year. We will send a flash email once this information is available. A qualified wildfire relief payment is any amount received by or on behalf of an individual as compensation for losses, expenses, or damages, unless otherwise covered, such as through insurance. Taxpayers are prohibited from claiming double tax benefits related to the same expenses. The FDTRA allows individual victims with a net disaster loss from any taxable year to claim an enhanced personal casualty loss under IRC Section 165H for federally declared disasters that occurred after February 24, 2021. The losses are not subject to the 10% AGI limit, but the $100 per casualty limit is increased to $500. Also, the loss can be claimed by non-itemizers. This relief is available for any federally declared disaster occurring after February 25, 2021 through February 10, 2025, which is 60 days from the date of the FDTRA's enactment. These disasters include, but are not limited to, Hurricanes Debby, Ian, Helene, and Milton, as well as numerous storms, flooding, landslides, and wildfires throughout the United States, including the Los Angeles wildfires. The FDTRA also treats East Palestine train derailment payments made to victims of the East Palestine, Ohio train derailment as excludable IRC Section 139B payments. We covered this topic in a recent issue of Spidell's Federal Tax Letter, a monthly newsletter, plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that impact your clients. You can get more details and subscribe at spidell.com under Publications. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.